Sam, thanks very much for joining us. You're Chief Investment Officer there at IMMO Capital. So just tell me a little bit about the strategy of the business.
We are a data-driven investment manager that's using technology across the entire value chain to be able to aggregate single family residential, or SFR as we abbreviate it to, into rental portfolios. And we're doing that on behalf of institutions. Currently, there's huge amounts of allocation to residential by the institutional world, but they are currently only able to access about 2% of the resi market, because only 2% of the resi market is multifamily stock and the build to rent type of opportunities, which means that 98% of this market is individual flats or apartments and individual houses, and using traditional manual processes that it's impossible to be able to aggregate and then manage those kind of portfolios at scale. So our technology effectively removes all those inefficiencies, making it possible to sort of create these portfolios at scale for the first time. So as part of the strategy, we are acquiring existing stock, and for us, that's a very important thing from an ESG perspective, because it means rather than constantly building new homes and creating all of those associated carbon emissions that come with construction processes, we're taking existing housing stock that's often been underinvested for many years by unprofessional landlords, and we're making it fit for purpose for consumers. So very important to us that we aren't attempting to draw people away from existing communities to new housing developments, but instead offering a housing product and a better rental experience for consumers within their existing communities that they already want to live in. And then for investors on the other side, we're delivering very stable income producing portfolios, and very importantly, undertaking that long-term management of those portfolios for them.
And this sort of single family residence is quite a new investment class, particularly in the UK and Europe for institutional investors. So in terms of the sort of appetite, what are you seeing at the moment in terms of capital raising and that side of things, Sam?
Yeah, the appetite, in general for residential, the appetite has gone through the roof over the past 12 months, as everyone else in the resi space has seen. In terms of specifically towards SFR, that's for us, the past 9 months have been extremely busy. People have really, a lot of people have been coming to us, asking us how they can access this market. SFR is not a new asset class. It's new to Europe, but it's actually pretty established in the US already. Blackstone was already the largest landlord of residential, individual residential units in the US years ago. And a lot of other big institutions, a lot of big pension funds have been sort of entering the space in the US. So there's a lot of investors who, perhaps they have exposure to SFR in the States already. They've started looking at Europe because they've increased their allocations to resi, and they just recognize that all this capital chasing that tiny 2% of the market, they're not going to be able to deploy the capital. So partly for lack of other options, they're having to be more creative and think outside the box a bit. And that's why they're now looking at SFR. The amount of technology we personally have had to be adopting into our lives, and the flexibility, I think that's really opened up a lot of institutional investors' mindset as to what technology can actually do. And they're now sort of much more open to considering these newer and more alternative strategies like SFR. So we've had a lot of inbound interest. We've recently signed about 1.3 billion euros from a couple of different large institutions. And we have sort of a number of other investors in the pipeline also looking to be allocating to SFR.
And looking at the sector there, it's interesting, Sam, that idea of the technology really opening up the potential for this sector. So where are you seeing the opportunities, particularly looking at Europe?
The beauty of this model is that it works anywhere that there's a liquid rental market. In Europe, a lot of our housing stock also includes individual apartments, and that actually means so we target individual apartments and individual houses. We're not only looking at houses, which I think is slightly different to the US. The majority of SFR over there is purely focused on houses, but we're also targeting individual apartments. which means that we're actually acquiring units both within cities and also within the commuter areas. And it's an incredibly scalable model. And because renting across Europe really is a mega trend that's only heading in one direction. So the opportunity really is there. Just also kind of touching upon us as a business, being a technology business, our model is also very scalable across Europe. About 80% of our technology can be essentially copy pasted into any market. That final 20% is very much about localizing it to local regulations, the legal system, language, market nuances, those sorts of things. So whilst we personally will sort of naturally be focusing on, some of the larger markets to start off with, like whether it's Germany, Spain, UK, so that we can leverage our technology as much as possible within a single jurisdiction, we will eventually be looking at most of the markets across Europe.
Really interesting to catch up, Samantha. Thanks very much for joining us.
That's all right. Thank you very much for having me.